Markets remain in wait-and-see mode with respect to the developing situation between Russia and Ukraine. Let's welcome in PNC Asset Management CIO Amanda Agati for more on the markets. Amanda, always nice to see you here. There's a lot coming at the markets very, very quickly. Russia, Ukraine, rising interest rates, inflation. We had a nearly 10% increase on the headline PPI. Lots going on. Do you think investors should be concerned about a potential recession scare? And what would that even look like if it should hit the markets?
Well, it's great to see you. Thanks so much for having me. There, for sure, is no shortage of material to try and cover and address and make sense of as it relates to this crazy market environment. We do not believe that the base case is for a recession to occur in 2022. We actually think that growth, while slowing, entering 2022, we're definitely seeing a slower pace of growth, both in terms of economic growth and also in terms of earnings growth. But slowing growth does not mean no growth, and it doesn't mean negative growth. And so we actually think the fundamental backdrop is pretty strong, even at this point in the cycle and in the recovery. The key challenge is going to be how far and how fast the Fed moves. That's our biggest worry. That's the thing that keeps us up at night. Are they going to be too aggressive and too hawkish that it might ultimately break the cycle? But we think there are a number of other forces at play here that won't force the Fed's hand to that degree. So we don't see it as the base case for this year.
Certainly, you're not alone in pointing at the Fed as the potential biggest risk for the markets right now. We were just talking about the Bank of America fund manager survey that showed that is the top risk in investors' minds. And the flip side of that we were talking about, and perhaps one result of that, is that people are underweight tech, or at least the lowest weight in tech that they've had in quite some time. You were mentioning the word growth a number of times. We're still seeing growth in a lot of parts of technology. Is that growth appealing in this kind of environment?
Yeah, I'm going to take the opposite side of that trade. So call me contrarian, if you will, but we actually think that growth in this environment is still fairly well positioned. There's no question that valuations are elevated across the multi-asset universe. Everything is stretched to a degree, but in a slower growth environment, we actually think investors will pay up for quality, defensible growth characteristics. So while aggressive growth has been taking it on the chin here, and I wouldn't say I'd be backing up the truck there, I do think that there are pockets of growth that still make sense here. You know, the key worry is always in a rising rate environment and a really steep yield curve, that's just going to crush the growth outlook and potential for growth-oriented equities. But we actually see the yield curve as staying pretty flat. All the movement's happening at the short end. And so even with the Fed raising rates numerous times this year, we still think the backdrop is supportive for equities and supportive for growth-oriented equities, as long as that yield curve stays largely flat where it is today.
Man, I realize this might be hard to pin down, but how scared are investors when you talk to them right now? It's not something you can obviously measure in a spreadsheet per se, but after a while of doing this, you do get a sense on what investors are feeling and what they might be inclined to do next.
Yeah, I wouldn't say that our investor base is scared by any means. I don't think it's anywhere near as dramatic as that. I do think they have entered 2022 a bit more concerned about the pace of advancement and the path forward. And certainly it's been a number of months since we've had to wrestle with the downdrafts that come in a high volatility regime. But our investor base is certainly conditioned, as I think the broader market is, to this choppiness that we've really seen as a function of the entire pandemic. And so it's been a little bit jarring, certainly to start the year. I think investors have a little bit of whiplash as it relates to that, but I keep coming back to the underlying fundamentals. And even as a function of Q4 earnings season, which is, well underway at this point, we're still seeing very strong positive results coming out of earnings season. Earnings growth is way ahead of where the expectation was to start Q4 earnings season. Margins are sitting at all-time highs, like well in advance of prior peaks. Top line growth is still very strong. So there are still a lot of positives to hang our hat on here. The challenge in the short run is it enough to keep this market rally going in the face of Fed policy, stance changing and policy winds of change kicking up? We don't think that it leads to another significant downdraft. We think it really just leads to a fairly choppy range-bound market in the short run.
And that is indeed what we have seen. Amanda, finally, I want to ask you about what we were talking about just a few moments ago, and that's the Russia-Ukraine situation, and then all of these sort of ripple effect tendrils that come from that, including what we've seen with energy prices. Is that something that you are acting on as of yet in your strategy?
No, we're not taking action on it. If you look at historically speaking, a number of geopolitical conflicts over the decades, it always leads to near-term market volatility, choppiness, much of what we're seeing right now. But ultimately, the market's able to kind of work through it, move past it, and ultimately forge a path higher. I don't want to say that that's a precise prediction. The crystal ball might be a little fuzzy relative to all the other, issues that the market is wrestling with this time around versus history. But we don't think that this is a really significant market moving event here in the short run. It's obviously something we don't want to take lightly. We care about what happens there in a very significant way, and we'll watch it very, very closely. But we don't think that's going to be the thing that's a nail in the coffin for this market rally. I do worry a little bit about what happens in energy markets, just given where energy prices are sitting today. An oil price spike here is not good news, certainly for the inflationary backdrop and what the Fed might ultimately need to do. But that's probably the most top of mind thing that we're worried about right now as it relates to that conflict escalating.
Added to the long list of concerns, PNC Asset Management CIO Amanda Agati, always good to see you. I'll talk to you on Twitter.